Bitcoin fund trading is underway for the second day following the SEC's approval of the first U.S.-listed exchange-traded funds tied to the cryptocurrency. The move offers investors exposure to the world's largest cryptocurrency without directly holding it. Yesterday, the first day it was available, more than $4.6 billion worth of shares were traded. For more on this, I want to bring in Eric Balchunas. He is a senior ETF analyst at Bloomberg. Eric, welcome. So let's back up to start off here. What is an ETF, first of all, and why does it matter?
Yeah, an ETF is easily described as a mutual fund with benefits, right? It's a mutual fund, but it trades on exchange, has good tax efficiency, and they tend to be really cheap, right? So they're kind of I compare them to digital music. If a mutual fund is a compact discs, ETFs are digital music. They're the new way people like to get all of their portfolio built. So the fact that a Bitcoin would be put into the ETF is big. Again, back to the music metaphor, it'd be like a band going onto Spotify or iTunes for the first time. It's clearly going to open it up to a new audience. Advisors in particular are the big audience of ETFs. They're the majority user. These are the people who manage about $30 trillion, largely among older investors. They do estate planning, manage the portfolio. These ETFs are likely targeted at them. And so I think that is going to be a big development, because if those advisors even allocate a little bit, there's a lot of money that could come into these ETFs.
Well, there have been efforts to get Bitcoin ETFs approved for over a decade now. Why is this approval happening now?
Yeah, the SEC has cited fraud and manipulation in the underlying market for a decade, but they got sued by Grayscale, who had a trust. Long story short, they won. Grayscale won, the SEC lost. So Gary Gensler basically said, sometimes we do what we think we have authority to do, and sometimes the court tells us. So the court overturned their decision because it was arbitrary and capricious. And once they did that, the SEC came around and they're like, okay, we'll approve them. The court says so. So they spent the last 6 months working on the documentation, risks, disclosure, all kinds of technical details, getting these documents in shape to a place they were happy with. And it all kind of played out over the last 3 months in particular. And we now have 10 new ETFs on the market and one that converted from a trust, which was the Grayscale fund that sued the SEC. So we're looking at 11 new ETFs launched on the same day, which, again, that's never happened either. So it was an exciting day as an ETF analyst yesterday, to say the least.
Yeah, well, Bitcoin's price has dropped since its peak back in 2021, but this approval is sparking a rise in price. Based on the trends that we've seen in crypto, Eric, is this likely to be a long or short-term reaction?
A lot of people are like, oh, it's a buy the rumor, sell the news event. And Bitcoin is off today a good deal, like 6%. So there could be some of that. People bought it thinking, okay, if it gets approved, it'll run up. And it did. It went up like 70%. So it could be some short-term selling. I think long-term, though, ETFs, again, are like bridges. They're bridges to advisors. They're bridges to institutions. They are convenient, right? You click buy, and all of a sudden you got your Bitcoin way easier than using like your own wallet or storage. And they're way cheaper than a lot of the exchanges. An ETF will be 20 to 30 basis points expense ratio and 1 basis point of a trading fee, way lower than most of the exchanges. So the traffic that these things are going to bring across these proverbial bridges is probably good medium to long term.
Well, what about the risks? What risks do people need to be aware of before putting their money into Bitcoin ETFs?
Yeah, sure. I mean, Bitcoin is volatile. And so I think a lot of advisors, we'll call the normal investors. There's some people who go all in on crypto. I'd call those the hardcore types. I think most normal people allocate a tiny bit to this. I equate it to most portfolio these days is like 60-40 stocks, bonds, with a little section for what I call hot sauce. And this is stuff just to scratch your speculative itch, cure your FOMO. I think this will fit in there. And the good thing about the hot sauce bucket is you don't really totally have to understand it completely, but it's like, yeah, just in case this thing becomes a big deal, I don't want to regret it later. So I think this will act as a little hot sauce on people's otherwise dull portfolios, which, as we know, you got to wait 30 years. So they compound. So people like to have a little action in the meantime.
All right. Eric Balchunas. Eric, thank you.
Thank you.